Hi everyone, it's Arsh Ellahi. Welcome to another video. I want to just quickly go through today's session where we'll be talking about my predictions of what's going to happen in the UK property market over the next 6, 12 and even 24 months. Now I've got some notes below me, so if I do look down, it's literally a case of just to recap on what I'm looking at and what I'm saying. Now, I want to say a quick hello to all the new subscribers that have come to the channel. Over the last few weeks, we've put out lots more videos and people, it seems that they're enjoying it. So if you are watching this, please feel free to press the subscribe button and the notification bell. So every time I release a new video, you get a notification of it. So we're in a difficult time. We're in an interesting time, shall we say, in the UK property market. So no one really knows what's going on. We're kind of in the way that I describe it is we're in a period where we're treading water, where we're trying to understand what's going on in the property market. A property price is going to drop. They're definitely not going to increase, or are they going to stay stagnant as to where they are? Now, the reason why I say that is because personally speaking, and the first thing that I should say is that this is not financial advice. This is not deemed as financial advice. This is personally my personal opinion. If you do need financial advice, I suggest that you go to see IFA, Independent Financial Advisor. First thing I would say is that I think personally it's too soon to tell what's going to happen and what kind of level of drop we're going to expect. So over the last few videos, I quoted that The Guardian said that there's a £4,000 drop month in, month out on property prices, and that it's been the lowest kind of activity that they've seen in the last 11 years. However, for me personally, I don't really buy all the hype, and I don't really read all the hype, etc., and I don't read the headlines. That's not me. What I like to do is look at conclusive research, understand what's going on. More importantly, look at this logically. Now, how can they suggest that that's going to happen? And the reason why I say that is because, first of all, estate agents have only just opened up. Now, they're getting used to new working conditions. They're getting used to virtual tours. They're getting used to viewing from a distance. Auction houses are getting used to virtual tours and bidding behind closed doors. So we haven't really seen a real effect of what COVID-19 is going to do to the property market, in my personal opinion. Agents have just opened up. Valuers and surveyors have only just got started, so they're going out and they're looking at properties. Now, they're in a difficult position. If anything, I'd say that they're in probably the most difficult position. The reason being is that if the valuation came in prior to COVID-19 and they've had to sit on their hands, what do? Do they value pre-COVID-19 prices, or do they value post-COVID-19 properties? Now, from a purchaser's point of view, obviously they want to lend as much as possible. From the bank's point of view, who they're generally instructed from, they'll want to lend as least or as conservatively as possible. So they're really in a difficult situation. If they go and value off pre-COVID, the bank's going to come back and say, well, have you looked at that conservatively? Bear in mind that we're expecting a drop. If they're valuing up post-COVID, which means that they're valuing it at a discount or taking into consideration that there may be a drop, they've now got a purchaser, potentially, that may not be able to afford the property because they may need more of a deposit, or the mortgage company won't allow more of a deposit or won't allow more of a lending. So they're in a really difficult position. Now, the one thing I will say is that also we've not seen the statistics for the amount of deals that have completed or the amount of property transactions that have actually completed. So we're literally looking at hearsay at the moment. There won't have been any transactions that have completed over the last couple of weeks. However, there will be lots of transactions that would have been going through prior to COVID and prior to lockdown. So therefore, we don't know the stats of what's completed, how many were instructed, how many deals were, or when I say deals, I talk about property transactions. So how many property transactions were actually agreed or had a sale agreed? And as a result of that, now, how many are actually going to go through to completion? Because that'll be interesting to see those statistics. But the fact is that no one will ever get those statistics. And the reason being is that they don't have the statistics for every estate agency to confirm how many offers were accepted and negotiated. So that's my first prediction, that don't take everything that you read as gospel. The reason being is that the statistics are very inconclusive. Second thing that I would say is that confidence is low. Confidence is low in the economy, full stop. So if you have a look at everything, you look at the financial markets, you look at the property markets, you just look at the general tone. As a result of COVID, we're now starting to divert our traffic our mindset away from COVID-19 to other issues that have happened around the world. And I'll say this: Black Lives Matter. So there's been a massive shift. If you notice over social media, you notice over all the news, we've kind of skirted over and away from COVID, and now started looking at other issues. And I appreciate that they are important issues and they need addressing, and I'm all for it. However, we're kind of, this is what the media do. The media literally talk about something, and then when they start to think, hang on, this is getting a bit too serious, and the government needs to say that we need to keep the morale up in general public, we find something else, almost like another movement. That I'm finding that confidence is still low. So confidence is low with regards to COVID, just purely because let's face it, the government have done a lot. They've done a lot to try and maintain it. So in that respect, they gave all the employees furlough payments. They've tried to keep as many people in employment as possible. They've tried to help with as many grants, as many loans to keep businesses going. And it'll be interesting to see. Again, we've got no results as to how that's going to work. It's great at the moment because all the businesses are lapping it up. Yeah, free money, free money, free money. And that's great, but at some point that tap is going to turn off, and when that tap turns off and the money stops coming in, that's where we're going to see a real change in morale. Because when the businesses have to start paying for stuff out their own pocket, they're going to have to start paying their staff out their own pocket, and they realise that the income is not coming in. It'll be interesting. Now, one of the key dates for me, I would say, is the 4th of July, because this is where they said that they're going to start opening up retail. They're going to start opening up the health and beauty industry. Now, what's going to happen instantly? There may be a surge. There may be a surge, especially in retail, just purely because people have missed retail. They'll probably miss going out to shopping centres. But however, my prediction again is that I think we're going to go into lockdown again. I think what will happen is that we're going to go up, and then as soon as we release all these people out into open space, into shopping centres, etc., what we'll see is that we'll see a second spike. As a result of a second spike, we'll then go back into lockdown. That's my personal prediction. I've been speaking to some friends of mine who are doctors and health professionals, and they kind of share the same vision with me as well. So that's my concern, that we may go into second lockdown. If we go into second lockdown, that will then increase low confidence into the general economy, because just when we thought we were getting back up, we're going back down. So, but it is inevitable that we will get a second spike at some point, because a pandemic of this level won't just attack us once. It'll attack us once, then we'll try and recover from it, and then as a result of being released, we'll get a second spike, and that's what happens. And if we have a look at what happened across the world, I'll use Dubai as an example. That's exactly what happened. They came out of lockdown, and believe it or not, they were out of lockdown for the best part of a week. They saw the death rate increase again, and therefore they went into second lockdown. So, it has been tested across the world. So one of the things that I was going to say, and what I was focusing on this video, is that if you are looking to invest, should you buy now or should you buy later? Now, I'll look at this from 2 points of view. If you've got lending or you require lending, or whether you're a cash purchaser and whether you're in that position where you can decide, shall I buy now or shall I buy later? There's two trains of thoughts here. If you're currently buying, I would suggest that you look at how much lending you've currently got. And the reason why I say that is because lots of people over the last few weeks have commented on my videos and said, Arsh, okay, I'm buying a property, let's just say it's a house, and I've got 90% lending, because this may be their first home or maybe their residential dwelling. Now, if you've got 90% lending, if I'm honest, again, this is not financial advice, but I would say carry on with your transaction. The reason why I say that is because if you look in the mortgage markets and the financial markets now, no one else is offering 90% loans. So therefore, if you did not carry on with that transaction, what's going to happen is that you'll move away from the mortgage product, and when you come to buy, perhaps again in another 6 or 12 months, and the reason why you may pull away is because you may think that there's going to be a price crash, which there will be. However, the chances of you getting another 90% loan in the future, or within the very near 6, 12 or 24 month future, is quite slim. because mortgage companies are going to be literally sitting on their hands for a short while. They'll be thinking, okay, let's have a look at what goes on the market. They'll be doing exactly what we're doing. We're watching to see what goes on the market. Naturally, the lenders will be seeing what's going on in the market, and they're reliant on their intelligence from surveyors. And if the surveyors come back and say, well, prices are dipping, the mortgage companies will say, well, hang on, we'll stop putting products out until we know what's going on, and then we'll release products once we've got a bit of stability in the market. Now, if you've got 90%, 70%, if you've got 80%, 90%, 85, 95% lending, you're not going to get that opportunity again very soon. So go through it. And the reason why I say go through it is because if you've only got 5, 10 or even 15% deposit, chances are that if you find a property within the next 2 years, you're not going to be able to afford it, because if you've only got a 15% deposit and the maximum that a bank is going to lend you is circa 70 to 75% of the purchase price, naturally you're short on circa 10 to 15% of a deposit. Now, how are you going to get around that? That means that you're going to be stuck in renting. That means that you're not going to be progressing on the property ladder. And that means that you're pretty much setting yourself back. This is my personal opinion anyway. Remember, the one thing that I say is that if you're investing in a property, chances are you're not investing for the short term. And I'll talk about short-term investing in a second. You're not investing for the short term. You're investing for the next 5, 10, 15, 20, or 25-year period. This could be your family home. This could be your base. And therefore, as a result, the property price over the next, with all due respect, over the next 10, 15 years, it will fluctuate. It has to fluctuate. We will get other issues that come up. There'll be other things that come up in the financial markets over the next 20 years. If you look at it, the last crash that we had, major crash that we had, was in 2008. That was 11 years ago. So within the next 25 years, expect another 2 fluctuations. So, but within that period, we'll go through some peaks and we'll go through some troughs as well. That's naturally what's going to happen. So if you are investing in property, whether it be an investment or for your own personal home, just carry on buying. Carry on buying, but be conscious of the purchase price. Now, like I said, if you're investing for your own residential dwelling and you have got a high loan-to-value mortgage product, carry on through with it, because you won't see that again anytime soon. Now, if you're an investor and you're looking, shall I buy now or shall I buy for the future? Shall I buy now or shall I sit on my hands? And you do require funding. Now, this is your call. The reason why I say it's your call very much because is what happens. Are you going to wait for the prices to drop? Are you going to wait? And if that's the case, how long do you wait? Do you wait 6 months? Do you wait 12 months? Do you wait 24 months? If you're saying, I'm going to wait for the mortgage or the property market to bottom out, how do you know when that's going to bottom out? Are you going to watch prices? Are you going to watch a house that's worth 100 grand drop to 80 grand? How long is that going to take? More importantly, how much is that going to cost you? So let's just say that a house has dropped from 100 grand to, let's say, 90 grand. That's a 10 grand. That's a 10 grand drop. However, when you look at it from a point of view, if you're going to get lending, in actual fact, and you're putting your own money into the deal, it's actually quite a little drop. So when we talk about your money, we're talking about your money and your deposit. Therefore, that decrease is actually quite low. Therefore, when you look at the cash flow that the property could generate over 2 years, which is whilst you're waiting for the prices to fluctuate, are you missing out on an opportunity there? What's the cash flow doing? Is it greater than the amount that it was going to drop? If so, carry on investing. I'm consistently investing. I'm not waiting for the prices to drop. I'm looking at this on the basis that, yes, over the next 10, 15, 20 years, prices will fluctuate. And we've seen it. I bought when the prices were low in 2008. I bought when the prices were high in 2015. So you just got to look at your portfolio as a spreadsheet and see where you are. You've got to have a look at what your debt level is. You've got to have a look at how you're servicing your debt. You've got to have a look at your cash flow. You've got to look at your P&L, profit and loss account, to see where you are as a business. So this is what I'm doing. Now, if you're buying with cash, you're in a good position. The reason why I say that is because you're in a position where you can dictate how much you're going to purchase that property for. Whether the vendors accept your offer or not is a different matter. But if the house is on the market again for 100 grand, there's no harm in you asking yourself the question, if this is still at 100 grand, if they accept the offer, would I buy it? Yes or no? If the answer is yes, then you've got nothing to lose by simply asking the question. Okay, it's worth 100, I'll offer 80. Now, based on that alone, if they say no, if they say yes, should I say, you're in a best case scenario. You've now got your property at a discount. If they say no, you then go back with a counter offer, 85, 87, 89, 90, 92, 94, and go up to whatever level you feel comfortable with. If you're already buying a property, whether this be with cash or with a mortgage, there's nothing stopping you from asking that question. So go back to the estate agent, go back to the owner and say, guys, okay, we appreciate that there's been a dip in the market. I was previously offered 100 grand, just in line with everything that's going on. I'd like to reduce my offer. If they come back and say, get lost, then literally you can make that decision. Am I going to carry on at the figure that we're looking at? And again, this will determine whether you've got funding or not, or am I going to pull away and look for something else? Now, other predictions for the next couple of years. Commercial, retail, huge opportunities, probably more opportunities in commercial than there are probably in residential, because there are going to be lots of buildings, and when we've got large buildings, you've got large overheads. When you've got large overheads, you've got more pain and more motivation, and it really is as simple as that. Now, we've seen lots of companies that are saying that they're going to start working from home. We've seen increases in companies like Zoom. We've seen increase in companies like Microsoft using Microsoft Teams. We've seen increases in Skype. So there's lots of, shall we call it, platforms where you can conference, online conferencing, shall we call it. So therefore, lots of companies are saying, well, you know what, to be fair, we don't need these overheads any longer, and therefore we're going to work remotely. Let's call it remote working, that's a better word for it. So therefore, all these offices now that they previously occupied a few months ago, now they've started to serve notice on their landlords, because lots of these buildings were not owned but were simply leased. Yes, there may be leases in place which they'll have to buy themselves out of, but when they look at how much rent they were paying as opposed to how much it's going to cost as a penalty clause, it'll be a lot cheaper to come out via paying the penalty than it will have been paying the rent, which means that there's going to be lots of buildings sat empty. Now, as a result of that, this creates lots of development opportunities as you guys, as property investors, or looking at this as a opportunity. What we will also see is that as a result of these opportunities now becoming available, governments will now take a reduction in their business rates, because these business premises are going to be sat empty. Therefore, we envisage that they will relax the planning legislation to get more residential units, because naturally they'll make some money from the residential council tax as opposed to the business rates. So lots going on. Finally, I'll talk on the mortgage market. So I'll talk about the mortgage lenders. Mortgage lenders, as I said, they're going to be sitting on their hands. They're not going to be doing anything interesting or anything exciting for the next few months at least. It's rare that you'll see that they're bringing out new products or exciting products to try and entice people to buy. The reason being is that they don't know what's going on with valuations and the prices right now. They're reliant on the intelligence of the other surveyors, and that information has not come back in yet. So in that respect, they'll be looking at from a point of view is that if the house is worth 100 grand now, what's it going to be worth in a couple of months' time? Therefore, what are we going to be comfortable lending on it, knowing that we're going to take a slight drop in it? We don't want to be geared too heavily. And there's lots of casualties such as Northern Rock, etc., Mortgage Express, that had these issues back in 2008. So they'll be learning from those mistakes. So there you have it, guys. Hopefully you found the video of interest. It's a little bit longer than what I normally do, but hopefully you found that of interest. As always, if you like the channel, please press subscribe and the notification bell. More importantly, the one thing I will say is that feel free to visit me on social media. So I'm available. My name's Arsh Ellahi, and you can catch me on Facebook, LinkedIn, Twitter and Instagram. Finally, the one thing I would say is that have you subscribed to the Property Rebel podcast? So I release a podcast every Tuesday. It's called The Property Rebel. You can find it on iTunes, Stitcher, as well as Google Podcast and Apple. And the final thing that I will say is that if you're looking for a property investment deal and you are looking for a rent-to-rent lease option, a HMO, below market value opportunity, I've got hundreds of them now on an app that I've developed called Property Investor. So you can go to www.propertyinvestorapp.co.uk, or you can go to the App Store and type in Property Investor, whether you be on iOS or on Android, type in Property Investor. All you got to do, it takes 2 minutes to register, and you'll see all the opportunities right in the palm of your hand. On that note, guys, I wish you all to keep safe, and I will speak to you all very soon. Bye-bye.